class time. Welcome everybody to another master class. Thank you guys for joining us. This one, we're going to be unveiling all of our top secrets that we keep from you guys, but not really because we tell you guys exactly what we do every single day. But welcome. We'll be going over the same thing. As I told you guys, we will be going over taking profit and going over runners as well in this class. It's not as complicated as you guys think. It actually involves everything we've been teaching you as far as structure, the levels, and you'll see that it all relates to each other. So I'm your host, Mr. Banks, along with no risk, no premium.
What is up, guys? It is the Bang Bros. No, I'm just kidding. Just kidding. Guys, it is Thursday. I've been waiting to say that. It is Thursday Master Class, favorite time of the week. Justin, thank you so much for the intro. Yeah, guys. Today we're going to go over the biggest secrets that we have, which is just market structure, guys. Where are the buyers? Where are the sellers? That's really it, guys. That's really all we're going to go over. I think first thing that we are going to go over, though, is we're going to discuss sizing. Okay, we're going to discuss sizing. And if you haven't already, I will say this before we even start. The last two master classes, might I pat my own back and Justin's back? I thought we did a fantastic job, especially the last master class about about the sizing, right? About sizing, and about the psychology that does come with sizing. Okay. But before we even get into the sizing, let's go over our trades from from this morning and what we were looking at. Okay. And first things first, guys, as far as sizing goes, watch those two master classes. But I think Justin can agree with me here. If you're having trouble with sizing, i.e., you're selling too quickly, you're taking profits too quickly, you're cutting trades too quickly, you're not allowing the chart to show you where your invalidation zones are, where are your profit zones, etc. It's likely going to have to do with sizing. And we go over this really in depth last class, but I'm going to go into it a little bit here. Is you have to discover what your risk tolerance is, right? And your risk tolerance is really what you're truly willing to risk on a trade to actually see if you're wrong, really, right? If you're wrong. Some people might argue to see if you're right, but how much you're willing to risk to see if you're wrong? Because if you have the mindset of willing to risk to see if you're right, a lot of people have a lot of money to risk to see if they're right because they think if I'm right, I'm going to be right huge, right? And so likely if you're going to be right huge, you're going to size bigger because you think you're going to have this big win. But in reality, trading, like executing trades, is not insanely hard. You buy and you sell. It's not, there's no other thing you do. You literally buy at a level and you want to sell at another level. From a simplicity factor, it is extremely simple. Looking to buy somewhere and sell somewhere. That's it. It's everything that happens the moment you buy or moment you get into a trade or if you short something, etc. Right? Is what happens mentally. Everything is between the ears and everything gets way harder. Okay. And the one thing that you can help control is all of that noise, all of that stuff that goes on in between your ear holes right when you get in the trade is really just your sizing, guys. Right. So let's say, for example, you like to have a 20% stop loss, which for some people, percentage stop losses work. This is not what it's not what we teach. Okay. But it doesn't mean that it doesn't work. Okay, but you have to know that trading options, especially a 0 day or anything of shorter expiration, a single 5 minute candle can fluctuate minus or plus 20%, maybe even 30%, right? So you have to know that. You have to know that. So let's say you like to put $1,000 position on, but you have a 20% stop. You're not fully willing to risk 1,000. You're fully willing to risk $200. So why wouldn't you just put $200 on a trade? Okay, why don't you just put $200 on a trade and let the trade play out? Because if that's your true risk tolerance, then you wouldn't mind if that $200 went to zero. Okay, but what you guys need to figure out is, and it's a journey everybody has to go on their own. Okay, it's what they have to figure out on their own. Somebody like Justin likes to say, somebody with $1 million account, they might only like to have $2,000 positions on. Somebody with a $5,000 account might not mind having $2,000 on. Okay, it's all specific to you. But I will just say this: try to ask yourself, if tomorrow you went into a trade, what's the dollar figure that you would not get upset about? You wouldn't type in the chat and be like, "Oh, this trade went against me," or you wouldn't be upset. You wouldn't yell at your wife. You wouldn't yell at your screen. You wouldn't slam your mouse. You wouldn't slam your keyboard. You would just say, "I was wrong," and move on. Okay. Now, what is that number? You have to find that out for yourself. But the one thing that you can do, guys, is just size way down, right? $100 to $200 of trading size to start. Okay. And by sizing down, it'll allow you to keep your emotions in check, specifically when you're in a trade. Okay. But it'll allow you to let the trade pan out, right? As well. So, from a sizing standpoint, guys, just size down. It's okay. I'd rather you spend 6 months size down, building confidence, building a foundation, allowing trades to work out and size up from there than to get in and start completely blowing your load and blowing your account from the get go, trying to figure it out because your size too big. This game is a longevity game, right? You have to keep you have to keep some ammo in the clip in order for you to keep on playing. You just want to have another at bat. You're gonna lose trades in this game. Everybody's gonna lose trades. Even if you're on a hottest hot streak of forever, you're gonna lose a trade. Nobody bats 1,000. So if you know that, that's why they always talk about keeping your losses at a minimum, keeping enough ammo in the clip that you can turn around and get back up to bat, right? Because in this game, if you strike out too many times, you won't have another at bat, meaning you just won't have any funds left in the account to get up to the plate again, right? So, Justin, I don't know if you want to add anything to that as far as the
Yeah.
size goes, but I'll
Um,
let you take it.
I think the one thing also to keep in mind is, look at it as a 5 year, 10 year, lifelong process. I like to think about, anything you wanted in life. You think about, what if I started 5 years ago? Or what if I started that 10 years ago? You keep putting it off, you keep putting it off. That's the same thing with trading is, you start small in the beginning, and obviously you want to make a bunch of money, right? But in the beginning, it's not about that. And in fact, trading's never about making money. It's about executing trades. It's how the money comes.
Mm,
So just try to think about the longevity of trading, right? It's very easy to get caught up into wanting everything now, but everything is a process, right? Like maybe you wanted to start learning an instrument, and imagine you never did it, but imagine if you started 5 years ago or 10 years ago, you're going to suck at it in the beginning. But if you keep working at it slowly but surely, 5 years later, 10 years later, you're going to be really good at that thing. So try to look at the long-term goal of trading, and don't get caught up in trying to size up too big, trying to make big gains in the beginning without, you know, understanding who you are as a trader, understanding the size that you're comfortable with, understanding, why I'm taking this trade, understanding an entry and exit. Without all that, right, you won't make money anyways. So why not just start small, keep small for a while until you finally get things down. And just remember, it is like a big roller coaster, right? It's not a linear, just straight up process where, you know, all of a sudden you're profitable and then you're never going to lose again, right? It's going to be up and down. There's going to be times throughout your entire career where it's going to feel like can't read the market right, all that good stuff. But, just stick to the process of keeping small. I can't,
yep.
it's so underrated. And sizing up too big, it's not, oh, I took a couple trades, I won. I have a five. I've been playing with $500. Now I'm going to go to $1,000, and now I'm going to go to $2,000 because I won a couple trades. No, it's more like a 6 month, year-long process. It's not just a couple trades I win and sizing up. I think a lot of people in here can agree. Even myself, I'm sure no risk as well, right?
Mm.
Especially in the beginning, is like, it clicked. I get this now, and then you size up immediately because you won a couple trades, and then you blow your account, and
You
you're
get
back to
humbled.
square one. Um,
Yep.
so that's what I have to add to it.
Yep. 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 I think that's good. I think you hit on a point that we talk about a lot and I didn't mention in the beginning, but guys, trading is not about making money. It's about executing great trades. And if you can execute great trades, money will be a byproduct. Okay. And it doesn't matter if you have $100 on a trade or $100,000 on a trade. That trade is still the same trade. It's just all about learning your emotional intelligence and your being cognizant of your emotions that comes with the sizing because the trade is still the same. The market is still the market. So, like Justin said, guys, if you can't string together 50 trades at $100 trading size and be profitable, there's zero chance you're going to do it with more money, right? And yeah, I think Jeff just said something really good here is so many folks have come and gone because they want to skip the steps of greed. And I mean, two people come to mind specifically for those of you guys that have been around is Jenny and BNO. And nothing, this is not a disrespectful statement towards them. It's just the truth is they came in and all they wanted to do was make a lot of money and they had some success and then they sized up too quickly. They didn't have a great foundation and as fast or faster than they built a huge nest egg, they blew it all and they're no longer with us. So, you just trust me when Justin and I say this, this isn't just lip service or anything like that. We've been helping people learn how to trade for actually, Justin, when are we coming on 4 years here, actually?
Yeah, in a couple of days.
Couple days. So we've seen it. We've seen every telltale sign. Right. So it's not, this isn't a lip service, guys. This is the truth, right? Build a great foundation. Build a great foundation. And then it's something you could do the rest of life. It's something you could do as a side gig to your regular job. And then when you go on vacation or then when you just want to and the market's there and you see the setup, then all of a sudden you make a great trade. Maybe you only make a trade or two a month, but it's a great trade. You buy time. And that extra trade is able to pay for that vacation, is able to pay for that new car down payment, new house down payment, whatever, right? The goal isn't to become a full-time trader for most. I don't think it should be. I think it should be able to provide financial freedom and however you define financial freedom, right? However you define financial freedom. So anyway, I thought that was a good way to start this off, guys. Just size down, guys. Size down. I promise it can never ever hurt you. Okay, but first thing I want to go into is today's trades, right? Today's trades. And I think a lot of the time is what we do talk about is the entry. We're talking about the entry, right? We're always talking about where are the buyers? Be where the buyers are, right? Be where the buyers are, be where the buyers are if you're looking at the call side, right? And so today, Justin and I both took calls right down here, 588.50, right? 588. And for good reason, we took those calls. Okay. And, but what I want to talk about here, guys, what I want to talk about is, part of your trade plan, a lot of people focus on the entry. It's all about the entry. It's all about the entry. But what the heck do you do when you're in the trade? Let's say you did snipe the low here, right? Say you did snipe the low. Okay. There was something I said on live, anyone that was on live today. I said at X number, I am likely going to be into runners. Okay, because from here, guys, from here, we talk about abscess, we talk about selling into strength. What are two areas that we know after this area, okay, that we have previous data, okay, we have previous data where we know intraday where sellers are. Where are those two levels, guys? Somebody type them in the chat for me. Okay, prior to our entry here, there are two levels on this 5-minute chart, okay, from prior data. So these prior candlesticks prior to this, okay, there are two levels. Okay, there are two levels. Somebody name them. Good. Where's the other one? Good, Rich. Exactly, guys. So just off of letting this data, letting this, right, letting this structure develop, right? We talk about preparing in the morning, having some patience, and then going to profit. Those are the 3 Ps, right? So we had that. We had the huge drop. We had another reject, okay? And then we had the long trade. Why was I into runners here on this candle? Because we were getting close to where the sellers were, right? We were getting close to where the sellers were. And we knew, right? And we knew that if we got up there, you always want to sell into strength. You always want to sell into strength. And just like most are like, well, it could have gone to 593. Well, it didn't. It didn't. There you go. What if it doesn't? Well, at least I sold the majority of my position out into here. stops to even, stops to low of the day, stops to, pre-market low here, right? Whatever. From there, protect yourself. And then what happened? Yes, did we come down? Was this price action a little wild today? Absolutely was. Absolutely was. But then where's the second height, right? Now you might say, "Oh, Chris, well, it's not, I only got to 593. It didn't get all the way to 594 pre-market high." Well, I hate to burst your bubble, but the market is never going to be down to the exact penny ever, right? Ever. Because you know why? I got stop ran here. I got stop ran right here. Am I mad about it? No. Why? Because I wasn't holding a full position. I wasn't greedy, right? We had this thing run up. Okay, we had this thing run up, and then it came down. Sure, it held pre-market low. Okay, but I had my stops here at low of the day. That's fine. Some people had their stops lower. That's okay. Okay, but and then it went up there. And then it went up there. Cool. Am I mad at that? Absolutely not. I could care less, honestly, because we had a great trade from 588 to 590. We had 3 points in literally 10 minutes, right? Because I got in right here, right when this hammer candle closed, I was in. We ran from 589 to 591. So 2 points in literally 10 minutes. And that net us like 40% right there. Boom. Up, gone, out, majority of the position gone. Cool. Okay. Then we went down and held, and then we went right back to that pre-market high, right? Where, yeah, pre-market high, pretty much opening print high right there. Okay. Do you guys see do you guys understand now where the targets are now as far as where you would want to get out of a trade or trim or get down to runners, etc.? Do you guys see how important it is now to always be selling into strength and not be greedy? Okay. Does that all make sense to everybody? I told everyone, I said, I'm going to be in runners when we get up to 591, 592. I said that on live. I mean, somebody tell me, yes, you did say that, because I said, I will be into runners here. Okay.
Because
You want to,
nothing is ever for sure, guys. I mean,
yeah.
obviously hindsight, yeah, easy. Hindsight trader bats 100%, right?
Yeah. You're
But
undefeated.
selling into strength, you never know what happens. I mean, how many
No.
times have you held a full position because you wanted more? You didn't take profits. It starts to reverse on you. No, I'm still holding. I'm still holding. And it never goes up to your spot and you actually get a full reversal
Mm-hmm.
and now you're big red on the trade, right? So selling into strength is never going to hurt.
Nope.
And also, even if you're not going into runners, especially that, I think personally, I think that's something that happens later in your trading career. Selling fully 20%, 25%, or at these targets, that's perfect. That's fine because guess what? The thing about the market is it gives endless opportunities
Mm-hmm.
to make another trade, right? Always another opportunity. So don't get
Yeah.
too down on yourself of, oh, well, it went 100%, it went 200%, and I sold it 20%, or I sold it even
No.
15%, like
You
whatever.
executed a great trade.
You're green. You execute a good
You
trade. You know, how many
executed a great,
people
yeah.
can't even execute green trades? They get in trades,
Mm.
it never goes green, right? They're always just losing, losing. So don't beat yourselves up
Yeah.
on a green trade. You shouldn't beat yourselves up even if you lose, but
No.
especially when you start to beat yourselves up on a green trade that you executed, doesn't matter the percentage. That's something
Mm-hmm.
that you can work on, you can get better on. But trading is already hard enough. And I just want to add this real quick is when you start to beat yourself up on green trades, those green trades are more likely going to start going away because now you're overthinking. Um, you're putting yourself down. That confidence is going to start going away. I mean, you're green, you have a green trade, and you're going to put yourself down, right? The more you do that, the more that confidence will eat away to the point
Yep.
where now you're second guessing entries. So,
Yep.
just be thankful, be happy with a green trade.
Absolutely. Yeah, guys, look. So what? Like, because look, this thing ran 40% here. At least mine was like 40% right here, right? Cool. And then it rejected. Okay. And then it rejected. And what if it never rebounded? Okay. And what if it never rebounded and you're sitting here holding and holding and holding as it goes lower and lower and lower and lower? Right. But if you have a plan to sell down the majority of your trade here, and for some of you guys that can't get into runners, take that full profit. That's fine. Because look what happened for the remainder of the day. Look what happened for the remainder of the day. Okay. There was a reclaim here, right? So you sold, let's say you just had this one trade, and let's say it only gave you 20%. And you're like, wow, it only gave me 20%. Man. But we went down and then we had a failed breakdown and held. There's another opportunity to get long. Then we ran, we overtook these sellers. We overtook these sellers. So from a structural standpoint here, from a structural standpoint, buyers overtook these sellers. Okay. Based out above them, could have entered here again for calls. Okay. Then ran up, then back tested, could have entered here again for calls. And why would you want to look for calls here? Because sellers dominated the top of this balance that it had given out. But when buyers stormed the castle here, who's in control now? Who's in control at 591 after this run up? Buyers are, right? And then look what happened. You could have taken another trade on this back test and hold and move right back into where? High of the day. There's your high of the day test. And then buyers stormed the high of the day, back tested, held again, ran it up another point and a half, 2 points. Okay, back tested here again into the afternoon. Who's in control here? Buyers are. Ran it up again, right? And so some of you guys, and it's easy to do it. You get so fixated on that one trade. You get so fixated on maybe you bought here and then you sold here and then it went up here and you're like, wow, well, it went all the way, it went all the way up here, it went all the way, blah, blah, blah. Who cares? Shoulda, woulda, coulda is for the birds. Shoulda, woulda, coulda is for the birds. I promise, guys. Shoulda, woulda, coulda is for the birds. But does anyone have any questions on the trades today? Right? Of buying those lows and understanding what abscess truly means, right?
Let's pull out the chart a little bit and look at the levels we are buying into as well. I'd
Oh wait.
like in the higher time frame, like
Oh, oh
maybe
yeah.
30 minute or
There.
1 hour. I think 30 minute probably good.
Okay, yeah. I mean, what do you guys see right here? What do you guys see right here? Let me take this out. Is this
What is
not
that?
down?
What is that called?
What is this called? What is this
What
called
what
right
do
here?
we buy into?
What is this called? Just this. Just this right here. Actually, let me just go like this. Just that. What is that? Balance.
Balance.
Balance. Good.
What's another word? Demand. Perfect. And
Yep.
what is demand? Who dominates demand? Buyers. There we go.
Buyers,
Perfect.
buyers, buyers. Okay. So we have balance. We break out. So this is just balance right here until the end of the day. Then we break out of the balance here, move higher. So buyers are in control right here, right there, right there, right here. You guys can see where buyers are in control, right? Does everybody see that? Does everybody see why that was a look to go long down there now? So it's also the overnight low, the pre-market low, as well as the balance high from yesterday, which ended up being demand. So who was in control there? Buyers were in control. When you do it, it looks so clear. Well, have you zoomed out? Did you look back to yesterday and figure that out? Because it was pretty clear. Well, most of you guys, you don't see it when it's happening because most of you guys are like this. This is your chart during the day. Right here. How many people, one of their screens is this chart? How many people? And if nobody says anything, then you guys are then there is no excuse. All of you guys should be killing it because you'll be able to look left, right? When in doubt, zoom out and look left. Go to a higher time frame. 30-minute is great, right? 30 minutes great because you get to see at least yesterday's data. You get to see at least this balance, right? your 5 minute chart, if you are going to be looking at a 5 minute, you should at least have your pre-market on there like this at minimum. At minimum, you should be able to see what happened to the left. Yep. If you can, have multiple charts up, multiple time frames if you can, right? If you can,
Or at least flipping through them. You know
or
what I
at least
mean?
flipping
You
through
you
them.
can flip through them, you know what I
Okay,
mean, as you're
Wesley, if what kills me is I trade from phone because I work, it makes it difficult. Well, I'm gonna tell you this: day trading is not for you, fella. I'm just gonna be honest. If you can only look at your phone and you have to go to the bathroom and you have to do, it's not gonna work for you. And you need to be real with yourself because you're gonna end up losing more money trying to do it that way, right? Trying to chase a call out, trying to do this. But there's other things that you can. You can be a trader, but maybe not a zero date spy trader, maybe a swing trader. Okay. But that would take for you to have to prepare the night before. You'd have to mark levels. You'd have to set alerts, right?
Yeah, I'd say that's a good point. And if you do want to day trade, yeah, buying Friday's contract,
And then
obviously
buying
anything other than
time.
the indices, you can buy
Yeah,
Friday's contract, buy 1 day out, 2 days out, but also preparing the night before,
is
having
everything.
alerts, it's just going to take a little bit more effort into it. It can be
Yeah.
done, but buying just a little bit more time if you are going to play the indices. We've just been playing Spy this week because honestly, it's just been playing really clean level to level.
It has been.
So pretty good reads on it this week. When Spy does that, it's kind of
Every
like a no-brainer to play.
Yep. Every day
Um,
I bought Friday's contracts every single day.
and
Friday's contract every single day, guys. Right? It is still doable. It is still. How many of you guys have found buying just a little bit of time, even 1 day on Spy? Does that help you at all? Yep. Joe says buying the next day. Perfect. Rich, yes. Jim, yes. Cool. 1 day always. Yes. Now that doesn't mean that zero day doesn't work, but you have to be able to have quicker execution with the zero day because things run and they fall a lot faster. So trading with your phone on a zero day is extremely hard. It's not impossible, but it is extremely hard. And not that, okay, not that, but it's also trying to do it at work in a small window of time makes it even harder too. I'm not gonna lie,
yeah,
right?
but just if you do, yeah, I would say just the more effort of going in the night before, knowing what you want to trade, if it is Spy that you want to master, having those levels out, having those, you can add alerts to your charts of, it's hitting this level, it's hitting that level.
Yeah.
So if you prepare the night before, you have, okay, I know this demand into about 588, 587 is, that's a massive demand, right? 589, right? That was the original level that we have been talking about all week. That's been a bounce level,
Mhm.
which we did bounce initially, those first two bounces.
Yep.
Just having all that available to you instead of just trying to take a trade and then not really having any, prepared plans of levels that of demand, of supply, of support, of resistance, definitely going to be a lot more difficult. So it can happen. You can do it, but I just say just to put a little bit more effort into having those levels, having those demands that
Yep.
already on the chart that you have. I mean, you may just write them down on a piece of paper. Okay, I know 589, pretty big level all week. It's been a pretty big pivot level to the downside, to the upside. Um, Riding in, down 588, 587, pretty big demand zone all week, right? So having that listed, even if you just have it, I know if you trade from your phone, having that on a piece of paper is going to help you as well. So
Yep. Absolutely.
that's what I would say that could help you there.
Yeah. And I'm not trying to be like over negative or sound condemning, but it's especially trying to trade from work in the bathroom on your phone that you have a lot of variables kind of working against you there. Okay. So I'm just being realistic. Now, that doesn't mean you can't trade. It doesn't mean you can't do it, but then trading a zero date makes it even harder. I would just tell you to maybe look to, like Justin said, prepare a little bit more the night before, have some level sets, set some. Okay. Set some alerts. Okay. And somebody just asked, how do I know what contracts to buy? Okay. Well, always buy as close to the money as possible. But I ask yourself this, can it go in the money by then? Okay.
By the time it expires. Yeah, can it
Yeah,
go
by
in
the
the
time.
money?
So how did I know which contracts to choose? Well, I'll just tell you. Okay, now we'll zoom it out here a little bit more.
It never hurts. When in doubt, it never hurts to buy at the money or right in the money.
Yep.
Never, that's going to be something that will never hurt you, right? I know you do see people, they buy way out the money, and if things run, those can go 1,000%, whatever, who
Can go
cares?
insane.
But that's, you know what I mean? But they also can fail.
They
The
fail more
chance of
often
them
than not.
failing and not
Yeah.
even going green is way more
Hugely.
likely than
Yeah.
hitting that 1,000% or whatever. Um, but that's where, yeah, I'd say in the money or at the money is going to be your best bet.
Yep. 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 So how did I choose contracts for Friday, right? Well, let's see here. Where was our major breakdown, right? From this 593? We had boosted on over. We kind of bounced in this area a couple times. We had broken down from it. Well, structurally speaking here, guys, structurally speaking, when this area held from Friday going into Monday, who are we going to assume to be in control here? Who was in control here? And this candle bunch and this candle bunch. Who's in control right here at 585 back in October? Seller, seller. Okay. Then what happened? We overtook the castle. Who's in control here now at 585? Buyers. Exactly. Buyers, buyers, buyers. Then what happened, right? When we broke out of this balance that we created up here and went down. Where did we bounce? We bounced right where the buyers had defended, and they defended their levels. Absolutely. So when we held again here on Monday, where was my ideal target was going to be anywhere from 591 to 593 that we could get back to. Okay. And what I did was after the market opened, right? I had basically I pretty much 588 calls all the way up to 593 on my watch list, right? I had a bunch of them on my watch list. But what I saw was the 592 calls had the most volume on the open, meaning the most people were buying that contract. So what that told me it was going to be the most liquid contract for the day, and it was. It moved very smoothly. Okay, the spread was tight on it. Okay, and today's contract it was 591, but yesterday's was 590, right? But it's just having those contracts, and we talked about that preparation night before. Okay, talk about that preparation night before. Go and add a few contracts to your watch list. Okay. Um, so
I'd say moving. Also, it also depends on the name you're trading. Mostly, yeah. But again, in the money or at the money, never hurts. There's going to be some
yeah,
names if you understand. You start trading certain names like Tesla, Meta. Those can have 10-point plus moves. You can take 4 or 5 strikes out the money, right? On Tesla, on Meta, and those will move. But it's just understanding what you're trading as well.
yeah. Like SPY is gonna be if you're buying time, you're gonna have to buy out the money, or you're gonna buy out the money because at the money is gonna be extremely expensive. 5, 6, 7, $8. Okay. My ideal premium too when trading those Friday contracts is around $2. Right. That is something I do kind of look for. If you guys notice, a lot of those they'll happen between, a buck 90 and like 210, 220, kind of in that range there as I identify what a good premium is to pay at that area. Okay, but let's zoom out here and let's look. Right. Yeah, $2 been the sweet spot for me when I'm buying time. At like when you're if you're gonna trade a 0 day, buy at or in the money. Okay, just buying at or in the money, you're gonna be okay. Right? Just buying at or in the money, you're gonna be fine. But when I trade out and it's a few strikes out, I like to see good liquidity and also around that $2 range where I know, hey, can we get here? And those 592s from or excuse me, 591s from today went in the money. Right? They went in the money. They actually went crazy. Okay. But now, guys, structurally speaking, why was our game plan today? Well, first off, what's this? What's this right here? 1, 2, 3, 4 candles. What is that? What is this right here? Starts with a B. 1, 2, 3, 4 candles. What is that? What is this right here? Starts with a B. 1, 2, 3, 4 candles. What is that? What is this right here? 1, 2, 3, 4 candles. What is this right here? Starts with a B. 1, 2, 3, 4 candles. What is this right here? Starts with a Balance. Good. Balance, balance, balance. Now, what did we say? Break and hold above 591, 592 was going to break over that balance. Okay. Was going to break over that balance and hold, right? We saw it right here. We broke over that balance, held it, and moved higher. Broke over that balance, held it, and moved higher. We knew that that was going to be partially a game plan that we could have. So now that we see that, who's in control on this chart right now? And we're kind of in this weird spot, but who's in control right now? Who's in control here at 593.67? Who's in control? Yep, buyers are in control. Absolutely. Buyers are absolutely in control here. So I'm going to get this out of here so it's not as kind of ugly. Okay. What you guys can kind of see here, this area where we consolidated up here and we finally broke through, right? Sellers became in control under this 593 all the way down to 591. It's kind of a pocket. Now, like I said, it's not going to be perfect. But what would we look for tomorrow? So let's talk about tomorrow now, right? What are we going to look for tomorrow? We'll go to the daily. It's going to be really clean here. Right? Seeing that we had this gap down where sellers were in control here and buyers took back over the castle. What's our level? Okay, if we open up above 593, what are we going to look for a back test into? Right? Because buyers or sellers were in control here, right? Sellers were in control here. Now, this chart isn't as clean because we're dealing with a gap, etc. But realistically, any dips into 591 that hold on tomorrow's open, okay, you guys could see it would just be a back test of structure. We just had consolidation. We had a base. We had balance build out. Sellers were in control at 591. So ideally, tomorrow now, if we open up above 591, we're going to look for the back test. We're going to look for the buyer to step in right here. Hold as long as it can hold. Great. Now, what's the other setup that we could look for too? If we fail underneath this, right? Because sellers brought those buyers back down. They brought them underneath. We'd want to see if the seller is going to be real here. Oopsie. We want to see if the seller is going to be real here. Okay. And if it is, and it rejects, and we can move it down back down to 585. Okay. Does everybody see that? This back test of structure at 591 is going to be big tomorrow moving forward, right? Yep. What could be the other trade we would look for here? Where would we straight up just see continuation higher? Over what number now? If we broke above this number, we would continue higher. Nope, 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 nope. From today, there you go, 595. Because we've already broken back into this structure here, right? We've broken back into this structure. This structure was built out. Oops. Okay. We've broken back into it. So sellers are in control here at 593. We've broken into it. Okay. We have broken back into it. Buyers have presented themselves. So if we continue over today's high, okay, let's say we don't even get the back test of 591, but we break and hold over 595. Buyers mean business. And where are we likely going to head from there now? Where's the next area where sellers are absolutely present? You guys said it before. Yeah, there you go. There you go. Yep. You guys were not wrong with the 600 at first. Obviously, yes, a break over 600, it would definitely be a long. Absolutely. Breaking a hold over 600, that is not wrong. But it's day where we had kind of tapped out in the market, okay, at this 595, right? Yeah, we did see that. We did see that if that does break and hold up a 595, we'll likely go up to 600 where the real seller is, right? Does anyone have any questions? I mean, Spy Guys is still really, really playing out very well. I don't want to do that. I want to go like that. From a structural standpoint, right? Every time we have created a balance or where we have sellers that step in, we've seen back tests. Okay. We've seen break of structure and hold, break of structure, back test, structure built out. Okay. Little fake breakdown, but a rip higher, back test into this structure here. I mean, again, it's really, really building out really nice structure. Okay. Really nice structure. Okay. Does anyone have any questions with tomorrow's game plan now? What are the two levels we're going to be looking to trade around tomorrow? Bingo. 591, 595. Exactly. Okay, how long did it take me to identify that trade plan? Not long. Are you guys doing this the night before? Be honest. Why not? Why aren't you guys doing this? What's the first P? What's the first P we talk about? Rich, I know you are. What's the first P we talk about? Prep. Failure to prepare is preparing to fail. Okay, do you do this before the market opens? Excuse me. Do you do this before the market opens? Maybe not the night before, but maybe some of you should start doing it the night before. Guys, you have to prepare. Have to prepare. Justin and I can give you every level. We can give you every call out. We can give you every single winner. Okay. But you could still find a way not to succeed. And just solely preparing on somebody else, okay, is never going to get you. You're not going to build. I hate to break it to you, but having someone tell you when to buy and sell is not a strategy. Okay. It's not a strategy because I'll tell you guys this. I'll tell you guys this. I'm not a lazy person in my life. I'm not. Justin's not a lazy person in his life. And I'm not going to speak for Justin here now. But if I could just have somebody tell me when to buy and when to sell and make $1 million, why would I do that? Why wouldn't everybody do that? Because it's not real. It's not real. There's no article out there of 8-figure trader followed this guy's, right? Follows this guy's thing, and now he's a successful. No. I mean, find it and then let me know. I'll sign up for it too. You know, but it's not real. It's not a real thing. Now you can have some success. You can absolutely have some success. But I always used to ask people this in the beginning too. If you like, let's say for some reason the SEC was like, nope, you can't have congregation rooms. You can't have platforms of people trading together. You can't have call outs. You can't do all this stuff. And all that went away. And Twitter went away and everything went away. Could you make money? Could you make money? The only thing you had was you and your broker. Could you make money? If your answer is anything besides yes, you should be worried. I'm just being honest with you guys. I'm not trying to scare you. I'm not trying to do any of that. I'm not trying to talk down to you. Because look, I was in your shoes at one point. Justin was in your shoes at one point. Everyone in here that's been good, Rich, Paul, etc. They've all been in your shoes at one point. Jeff, all been in your shoes at one point. Okay. Having a community to bounce good ideas or off of is one thing, but solely not being able to do something and have to piggyback, that's not going to get you anywhere. I promise. Right. So we give you guys the tools, we give you guys the education. Okay. Start taking advantage. And I'm not telling that you guys have to go out there and be the best trader tomorrow. No. Right. But start really thinking about that. Are you preparing, right, to set yourself up for the future? Right. Because as much as you guys might think, I don't think Justin and I are going to do this for our entire lives. I don't think I'm going to be 70 years old and doing this. Now I might, but at some point, right? I'm gonna go away. Justin's gonna go away. Paul's gonna go away. Rich's gonna go away. Christian's gonna go away. All like what happens? And if so, I always ask myself, if you know, once the lights get cut on, right? Someone turns the lights on. Are you gonna be the one standing with your pants down? Like you don't want to ever be the one standing with your pants down, right? So we're not gonna go anywhere, guys. I'm just saying. At one point, yes, Justin and I will no longer do this, whether we are dead or we have gone on to do something out in many, 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 many years. I'm just trying to make a point of, do you really know how to do this? Okay. Do you really know how to do this? Okay. Or are you just doing it the lazy way and you're trying to reap the benefit without doing the work? And eventually it's going to run out. All that luck will run out. Right. So,
The one thing I will add to that as well
and you guys are
is,
trying, first off. Sorry, Justin, not to
oh,
cut
you're
you
good.
off. You guys are trying. And I do love you guys for that. I'm just saying, you know, it's just a reminder because, like I said, guys, everything that Justin and I tell you is because we were doing the exact opposite before. And we wish that we had someone like we are now to metaphorically just slap us in the face and say, "What the heck are you doing?" Right? So, just take that with a grain of salt as well. Anyway, Justin, go ahead.
And one thing also just keep in mind when going and putting in the effort, putting in the work yourselves is, I said before, is finding out what type of trader you are. We're giving you the tools, we're telling you how to look at the market, read the price action, doing all that good stuff. But again, every trader, everybody has their own personality, right? Nobody trades exactly the same. I don't trade the same as no risk. We both
Nope.
took calls today. We both trade differently,
Yep.
right? Still same idea, buying calls and demand, but we both trade it differently, right?
Yep.
So understanding and understanding that you do have to understand who you are as a person and what works best for you as a trader,
Yep.
um, is something that you also should be working on as well. Like I
Absolutely.
said, some people, right, we see them. Some people are perma bears. All they like to do is take shorts. Some people, all they like to do is take calls. Some people
Hmm.
like to do a mix. Um, there's so many different ways to make money in the market. Um, some people only like to trade the mornings. Some people only like to trade the afternoons. You know what I mean? Like there's so many different things, but they found out when they do become a consistent profitable trader, they found out what works best for them and their personality. So while you learn from different people, that's why we do this. At the end of the day, you're not going to trade exactly as somebody else. Like you're going to eventually trade and take these tidbits and figure out what works best for your personality. So keep that in mind as you do work your way and you do learn. Is you're not going to trade exactly like me. You're not going to trade exactly like Norris or anybody else. You're going to trade what works best for you. So try to figure that out as well in your process.
Absolutely. All right, guys. I do think, actually, how many of you guys like when both and I, Justin, are on live? Okay. It's tough because I know Justin likes to focus, and I know that I like to focus and not be focused sometimes, if I'm just being honest, because I know myself. So, I try to keep it as a good duo, but I've been just hopping in um, a little bit later on after the open, or just when Justin just wants a day off and well deserved, obviously. Um, and then I'll hop in. But I think we'll keep it that way. I kind of like it. The people have spoken.
Yeah, I'll get to.
I like it too. That's
Well, it's
good.
good because it
Because
gives
like,
different perspectives. You know what I
yeah,
mean?
because today, yeah, we did. We our idea was still the same, but the execution was different. But it was still good execution on both sides, right? So just like we said, guys, you're gonna make your own style. You're gonna like that's gonna come. Hopefully, you can take tidbits from other people and kind of cultivate or create, what's actually works for you. Because you could have taken calls, and for some people, taking calls but buying 2 weeks out, right? Or someone could be just buying a zero date, right? Is one right over the other? No, you just both executed a great trade, right?
Or there
And
was in the morning, there's a couple short positions
and
that
there was some shorts that
could
you
have
could have taken.
taken
Exactly.
that now
Yeah.
worked for some people. You know what I mean? So
Yeah. Exactly. So anyway, I mean, Justin, I don't have anything else. Guys, two levels we're gonna watch tomorrow, 591, 595. That's all we're gonna be watching tomorrow. Justin, do you have anything else you want to add to this, or do you want to let them know what tomorrow is?
tomorrow is Friday.
Bing bong.
So as Fridays, guys, always like to be a reminder. If you're green on the week, if you want to trade Friday and you have enough profits to trade with a small portion. So even if that position goes to zero, you are green on a week. Another option, have a 3 day weekend, right? Uh, if you are profitable on the week by Friday, but if you were to take a trade and it does fail, those profits on the week go close to zero if it were to fail, or you would be in the red. My opinion is don't trade. You're green on the week. You just spent 4 days fighting the market. You won. No need to risk it on Friday. You're green on the week, end it. That psychology of going into next week, having ended the week before green is going to help tremendously versus going Friday and um you blow, you blow your account or you turn red, right? It's going to have a bad psychological effect on yourself. Coming into Friday and you're red on the week, no need to add injury or was it insult to injury. Take the day off, figure out why you went red, and paper trade, always a good way to do it. But just I want to open your broker, figure out what you did wrong, spend the day maybe practicing your mistakes that you made along the way as paper trading, because in Friday you're already red. More than likely, you're not going to turn things around, right? So uh, that's how we do it on Fridays. One and done should be plenty enough.
Absolutely, guys. Not what you make is what you keep. Keep enough ammo in the clip to have another at bat. All right, guys. That's gonna be it for me. 591, 595. Tomorrow we do have some data. I'll just look at it real quick with you guys because I got you here really quickly. In the pre-market, tomorrow. Sorry. In the pre-market, there doesn't look like much going on. Just have global composite PMI manufacturing PMI 15 minutes after the open, and then University of Michigan data 1 in 5 year inflation expectation at 10 a.m. That is always going to give us some volatility. So let's just be prepared for that. Other than that, we'll see you guys bright and early on the pre-market huddle. Peace.